Are we live?
Yeah.
Oh, awesome. Okay, guys, welcome. Welcome to another episode of Stock Therapy. I'm your host here today, Huddie, with Dom, Master Mateo, the one and only. Bright and early. Happy to be doing this. Happy to be here. Can't wait to trade some stocks this week.
hmm
Um, a little bit of background where we were last week and where we're going this week. Today, we want to do a little bit of watch list building since we do have you guys here pre-market. Generally on Mondays, we're taking it slow. We're getting a feel for the market. We're just, testing the water, see what's moving, see what's not moving, collecting as much information as we can. Specifically, not trying to put us in a huge hole on Monday to dig out of for the rest of the week. Okay, like it's better to probably not push buttons or be very specific about the buttons you're going to push. And what we kind of have to do right now is figure out what's moving and what's not moving. So that's kind of what we're going to be going over. What stocks look good, what charts look good, what's been working, what's not been working. Aside from that, last week we had a number of OTC stocks running, really well. Me personally, the kind of stock therapy I need this week is I decided to really push it. I decided to push my size. I decided to push my risk tolerance. At some point in your trading career, in order to get to that next level of trading, you have to decide for yourself whether you want to get there. And getting there is going to mean a couple things. It's going to mean bigger losses. It's going to mean more stress. It's going to mean patience on sizing in and a bunch of other things that have to come into this kind of conversation. But I definitely pushed Thursday and Friday, given the market, given what we've seen working, given how well these OTC breakouts, my bread and butter, Dom's bread and butter setups have been working. We decided to push. I decided to push, bigger size than I've ever, had in my life. And it did not work. I crashed and failed. I burned. I lost half my week's amount. So to put it in retrospect, it is a lot of money that I lost. But it was only half my week amount of money. So, yes, it's a push, but I'm also pushing off a very hot streak. I'm also pushing off of some cushion. I'm also pushing off the idea of trading stocks right now disgusts me. That's going to come into the play. Like when you push and you really exhaust yourself, like you don't want to come right back to do it all again Monday. But that's kind of, that's kind of the gig. Sometimes it's good, sometimes it's bad. But that's where we are right now. And I'm taking whatever I learned last year and I'm going real slow this week because I don't want to just continue to push when it didn't work. I just really want to be specific about what I'm trading moving forward. And then if I can find a situation that I can size into, that's what I'm going to do. But for now, I really just want to take it easy because I absolutely mentally drain myself. And I know if I just start pushing on everything and anything, I'm going to have the same results as last week, big losses. I don't want that. At some point in your career, you got to decide like, hey, do you want to be a $10,000, $20,000 trader? Do you want to make 10, 20, 30K, a week, which is not, it's not nothing. It's really good money. Or do you want to take it to that next level and hit those $100,000 days? And without the $100 days, like with the $100 days come $10,000 lost days, right? And you have to understand that it comes with the territory. And it's up to you if you want to push it there. No one says you have to make 100K in a day. No one says you have to make 100K in a week. That is not necessary in this gig. That's an ego thing. But it's also something that's really cool and something that's actually possible with what we do. And it is kind of I don't know, a goal to reach, I guess for me. I don't even know if I really want it. I honestly don't. I think it brings on a lot of stress. I think losing that big is never necessary. I think I'm very happy losing 2K to make 10, 20K every day. And then when I, change the scales to lose 10K to make 100K, it doesn't sit well with me over the weekend. I don't enjoy trading anymore, so teach their own. Something that everyone has to go through. It's literally stock therapy, right? It's literally things that we go through as traders, right? But that's kind of where I'm at. Dom, where are you at this week?
Yeah. Similar to you last week, I know we kind of got all hyped up and excited about potential market shift and like a lot more on watch. But there is that chance that having the quantity of plays there can distract you and kind of force you to like put on a bunch of size everywhere, and then you kind of don't really, you're not picking the right spots. You're not waiting for those perfect triggers. You're just kind of getting involved everywhere. And I think that's what me and Huddy did a little bit too much last week. Was we saw good setups setting up, and similarities between what's been working and potential plays, but we kind of forced the action a little too soon. Maybe in spots where it didn't warrant size, and then we kind of got mixed up in that, and it led to kind of mixed results. And so I think it's a good lesson. You got to find that right gear. Like when things start to move, you have to expect it to be like at least multiple weeks, possibly multiple months of, some hotter action. Like, you need to find the right gear where you don't get overworked and over mentally drained from 2 days of action, like I feel like happened to us last week. And
Totally.
it goes back to kind of what I kept saying to Huddy every time he'd bring up more tickers for us to look at. I'd be like, we have the one we need right now setting up. Like, it was TGGI and ILUS. And had we played those better and we're sitting in those with better averages, maybe not TGGI, I think that one kind of dumped on Friday. But, right now we're kind of in the spot where we're day trading ILUS with size. And, every time I zoom out and pull away from it, I'm like, this is the difference. When I talk about comfortability and why my entries matter so much at the beginning end of the trade, like, being long here and sitting through this action, being long in here and sitting through this, that, like, having an average somewhere 38 to 40, which is, mid range of this whole range it's been in the last few days, is very uncomfortable every time it pulls when the stock is this overextended, because you don't know which is the last panic to send this off a cliff. But if you're in from, down here in the low 30s, you have no problem sitting through those because they're not changing your P&L from up to down, from up to down. And with the size we're playing, such big swings, like every one of those, like I'm like, I kept saying to myself, like, it feels fine. It feels like it's just taking more time to break out than I want. But every time it pulls or every time it goes to the breakout level and doesn't break, I'm like emotionally so attached to this ticker that it's like wearing me down. Like, after the Friday afternoon where I expected that final push through 42 and then, a clean weekend hold, potentially a gap up and spike, and then it fades off. And I was like, this could totally 100% be a huge shakeout, get all those 42 buyers to rebuy again today or at the close Friday. And it makes total sense why that would happen. But, like, how many more of these pulls do I have in me? Because, like, this stock is just, like, eating me alive. And so I think that's kind of where we were Wednesday, Thursday, Friday, was just like, it was just getting difficult mentally to kind of be in all these. And this also was the first time in a while where I think every day last week, I pretty much sat here from open to close. And that's not something I've done for most of the summer. So, just being here, I did have like mild tension headaches at the end of every day. I was like ready for bed at like 7 o'clock. Like, and then we would go back and do more charts at nighttime. And I do think I was just getting a little drained out. The weekend was great for me, a nice distraction from the market, decompress. And, now I can see things more clearly. I kind of know what I want to do. I go back to that blueprint of, find those best setups. Like, I looked at the same list of tickers that we had last week, and I was like, so many of these that look decent, I touched last week for no reason because they're still setting up. And if I just continue to wait and wait and wait for the right triggers, the right risk levels, the right entries, and, we'll be completely fine this week. There's still those tickers out there. So there's no need to push it. Just kind of wait for the best of the best and, let those add up for me without all of the extra mental breakdowns.
And this is why I like it better when there's not like 10 or 15 plays to sort through. You got to find like the best of 10 or 15. You don't really know what the best is in the moment. I mean, you have a good guess, but there's 10 or 15 stocks to watch. There's 10 or 15 stocks to potentially size into. Like, it's just, it's not only frustrating, but it makes you flabbergasted, I like it so much more when there's like one or two or three of them that are your setup, and that 99% of the other things out there are not your setup. Like, that's easy. But when everything's my setup, all of a sudden I'm like, okay, what do I do? Like, I don't want all these positions. I don't want, staring at ILUS for 3 days while it moved within a 4-cent range. Like, that was not my idea of fun. My idea of fun is more like CYBL trading, like we always trade. If you pull up the CYBL chart, we went over this, I think on Thursday when I first bought it, where it was just much more our style, much more buying in 3/8, buying that low entry, buying that trigger, allowing it to float up to that breakout level and having that comfortable average to just sit in, right? Risking that low. We talked about this completely, like having that higher low off that 3/8, 3/5 area. And that's exactly what we had on Friday. We had a 4 hold and then kind of a perk trail close. For me personally, I'm no longer in the stock. Why am I no longer in the stock? It has nothing to do with the stock failing. It has everything to do with me exhausting myself, right? It's you versus yourself. That is why stock therapy is created, right? It's not like, whoa, me, like the stock market did this to me. No, I decided to push into ILUS. I decided to push into TIGI. I decided to push into CYBL. And at the end of the day, when everything started coming crashing down and I was absolutely exhausted for the week and didn't want to trade anymore, I sold everything. I wanted to have that slate. I understand that one bad week that can have like effects. So again, it's a big part of just knowing where you're at mentally and resetting yourself if that's necessary. Definitely necessary for me. I don't really want to trade anything moving right now. I just want to sit on my hands and kind of wait for that best setup again to come, because you know what? They do come. That's the good news. Every week, every 2 weeks, like there is something to trade. You don't need to push buttons every week. You don't need to push buttons every day. Oftentimes, the best position is no position, or the best position is adding to your current position. It's not finding a new play. So yeah, let's go over a couple things that we're watching, Dom, today. As we get, we have 15 minutes till market open. I'm sure CYBL is one of the things you're watching.
Yeah, I mean, I'm still kind of annoyed that on Thursday, that's when ILUS was still setting up, and I kept saying to you, I mean, I recognize that was the trigger. We talked about that on Thursday, I think, or Friday. That 3/8 level was important, and like you said, I mean, it's like the difference between that and ILUS right now. If you're in from 3.7 to even to 4, none of those pullbacks that looked horrible, because if you look at the intraday on Friday, it doesn't look great, but in reality, it's not time yet. It hasn't broken out convincingly. It's a perfect consolidation day higher than the previous level. That's what you want with that early entry.
Yeah.
And I mean, if you stop loss that 3.4, 3.5, leave it alone. You come back today, gap in 4.6, 4.7. You're like, wow, we're in great shape. But in reality, you sat there all day and you watched it, and that led you to have some bias on the stock, like the stock is horrible. When in reality, we're losing track sometimes. We're allowing other plays that are pissing us off or draining our energy to affect other ones that aren't there yet. I mean, how many times last week did I look at this pool of like B plus A minus setups in comparison to like TGGI and ILUS, and they were like my leverage. Like having those work was so that way I could risk more on ILUS, and I treated them differently because I expected them to that toner to go break out and run to a penny now, because I need you to give me money now so I can risk more on ILUS. In reality, I looked at it last night and I was like, what pattern am I doing here? Like, this is just chop city. It's not set a base. It's not set a trigger. Like, it's not ready. Like, it's not time. And you go back a month earlier, I wouldn't be buying this yet. I'd be sitting there. It'd be on a chart like this, and I'd be waiting for it. And that's what we can't change that because we expect the market to be hotter. We have to sit back and actually wait for the best of the best, and not let, like you said, exhaust ourselves due to clicking so many buttons, because there are these setups that are still out there, still setting up. We just have to wait for the best entries. Like this is another one that I forced on Friday, BONZ. Why? It's not ready. It's not ready. We need some level lower high off of this breakout, and then a base. We don't have that yet, so don't click buttons. But we can talk about what we're looking for. I'm still in ILUS. I mean, I look at this daily chart and I think, and I mean, this is another thing. It's like we talked about on Friday, I think, or Thursday, I don't remember. The stock doesn't care about your emotion, doesn't care where your entry is, doesn't care what you expect. It's going to do what it's going to do. It's going to set up as long as it needs to take to set up. And I had this idea, this mindset, that this is going to be a huge short squeeze, and this is the real parabolic blow off that's time. That on this day, Wednesday or Thursday, it just has to go break out and go nuts. When in reality, if I don't have that aggressive mindset, that urge, I'm about to make a ton of money, it totally makes a bunch of sense that coming off of this 26 low off of 42 cents, that's a huge two-day red swing. For it to be back up near the breakout level, I should realistically expect consolidation to happen before it breaks out. And that's what I should want, because a stock going from 26 straight through that 42 is going to have far less capability of going nuts than a stock consolidating at 40, getting a base, and then ripping. And, that's where we inflict our own emotions on the stock when, it actually works to your detriment, because, I would rather it consolidate up higher. But because I have so much size and because I'm so uncomfortable, I just every downtick scares me. So I just need it to go higher for my own sanity. And that's not how you should be trading. So for me, this one, it still looks completely fine. Each day it holds up here. I feel better about it. But, and then I'm always looking at things from multiple points of view. And then the opposite of that is, we've now tested and failed 42, 1, 2, 3, 4 times. So, you got two two edges of the sword or whatever. Like it either that means that the actual breakthrough 42 is going to be explosive because so many people now are treating that resistance level as, it has to hold. And that would mean that when it does break, you're going to catch a lot of people off guard. And then the alternative to that is this is overextended. It's up from 7 to 42. Like that is a huge move. If it's continually showing you that it's not breaking 42, that would kind of lean towards a fade off as buyers like us get worn out and get bored of holding it, and that could trickle off effect to this thing just fading off and never breaking out over 42 again. So I think today will be a super interesting day. The behavior of this stock since that big red panic day has been pull out of the gate on lower volume, hold up, and then spike through those highs back up towards the low 40s. But something different happened on Friday that's kind of making me adjust my plan. So the biggest gaps on this one have been when the stock closes kind of weak. Like on this day, you had the big gap. And then on Friday, you had that really hard fade off into close. And then you go back to Thursday, it actually closed on a really strong move. And that initially was met on the open with a strong pull through all support of that day. That held and rebounded, as if it never happened. So my mindset today is because of that weak close, we kind of took away that weak open, like that part of the pattern, and it should gap up and spike instead of the alternative. I don't know if that made sense to anyone, if it was too much, but I'm always looking at the behavior of the stock, what to expect out of the open. So I do expect this not to be breaking this low because I kind of am envisioning this pull as like the same pull we've been seeing out of the gates, if that makes sense. And I'm still waiting for that breakout, and I want to swing one day past whatever day we actually break through 42 and hold. And that's really my plan on this, and it's not changed because if you look at this action, I mean, it's just a perfect consolidation underneath the breakout level. And, it's just because of my average and having to buy it in this range that's making me so uncomfortable when in reality, it's holding up completely fine. Underneath this like 36-ish area, I think it's probably dead. So if you wanted to have max like your risk level of death, that's probably that one. But again, it's scary every time it pulls towards these levels.
Way to put it, because I imagine if it does start panicking to 36 and it doesn't catch a bid, it's going to be death. It is important to recognize in the back of your mind, whoever you are, like the stock is up from 7 cents, and if not lower. It is at 40. Like these could be all-time highs, or it could be the next TSMP and or SHMP of the past, where these things start at 7 cents and they eventually go to a buck. Which we've seen, multiple times. I mean, it's not out of the realm of possibility, but it does take a very special scenario, which ILUS is a special scenario, given the volume, given the volatility, given the consolidation. I mean, everything Dom touched on. It's very explosive to the downside, and it's very scary to the down. It's very explosive to the upside and scary to the downside, right? We're just at a point in the pattern where this thing is extended. But when things get crazy, they can get crazier. Like that's the coolest thing about penny stocks. Like when stuff gets insane, like that's what breeds insanity, So yeah, I think it really does go either way. For me, I was playing it at a different point in the chart that I ever usually play a breakout, and now I don't want to touch it. And I've ruined the ticker for me. I've spent way too much time on it. I've traded it way too many times. I loved it at 10. I loved it at 20. I've hated it at 40. I've hated it just because of where it is. It's very extended. It has not consolidated up here for very long. I mean, every day that it consolidates up here, it's better, right? Like it's a moving target. But man, I'm so sick of looking at ILUS. I don't want to look at it anymore. I want to find something else, something that I know I can size into, take some good size in, and be patient. What I've been doing really well. Is finding stocks to buy early, before they break out, risking, the absolute lows of the consolidation, and then allowing it to set up multi-day higher lows. CYBL is a perfect example. That's where I want to be. I want to push one button, take my size, walk away, don't have to worry about it for 2 or 3 days, check back in 2, 3, 5 days. If I had done that with TGGI and ILUS, I'd be up 400%. That is hindsight, but that is what I see working. That is what I see working. That is why I see it keeps me patient and calm and sane. Just one play that really can move the needle. That does not take a lot of overthinking. It just takes an entry, a stop loss, and an expectation with a pattern involved. That's my style of trading. And I don't like front running breakouts. I don't like sitting there looking at every penny going up or down saying, is this going to break out? Is this going to break down? I don't like when every penny is $4,000. It's just ridiculous. But at the same time, Dom's totally on the right track. I do think, again, ILUS, it's very explosive if it can work. But it's a big if it can work up here. It was a lot easier to do this when it wasn't extended. It was a lot easier at 20. It was a lot easier at 10, right? Up here at 40, you have some doubt. And it's natural to have some doubt. Like, it's logical. Like this thing is extended. You have to recognize the extension on ILUS. A number 5, or what is it, a 4, 5, 6? You have the 4, you have that breakdown where it goes from 40 to 25. You have the 5, the panic dip buy, and then you have the 6, which is the bounce, the reshort on the bounce. Sometimes the 6 doesn't turn into the 7 and the stock keeps going and it goes much higher than anyone ever expected. Other times it fades off and doesn't come back for months. Remember, TSMP made a high at 50 cents and then it was another month and a half till it broke it and went to $1, $2, right? Like, that could be in the cards here for ILUS. We just don't know yet. It's intelligent to have in a position on ILUS just in case that's not the situation. But for me, it's too risky at this point. I don't know how to trade it where it is with being comfortable, so I don't trade it, right? Like, I don't know what to do anymore. I'm kind of like in the boat where it's like, let's find something else to trade. Let's find something that I know how to trade.
And Huddie, I mean, that's kind of just inherently how it works. Like with something like ILUS, I remember Shimp pretty clearly. That was like a year or two into my trading career. And, I did really well on it when it was like under 10 cents and under 20 cents. Because they're smaller priced, they're thicker, so they're going to move less. The percentage moves. Like a 3% move on a 15-cent stock is a lot bigger than a 3-cent move on a 40-cent stock. So like they're going to have smaller, tighter ranges, which are easier to trade in terms of comfortability and safety. Once like Shimp got to like 50 to 70 cents. It was all over the place. 10-cent moves in 2 minutes were the norm. And that was fully within trend. And that's kind of where ILUS is now, where it's consolidating from like 36 to 42, which is a really big percentage shift each time it does that. But it can do it safely, which makes it very hard to trade because that's a big range. Whether you are at the low end or the high end of wherever your entry is, it's either a lot you're giving up unrealized every pull or a lot you're going down on every pull when it's actually still technically working and in trend. And that's what makes these so difficult when they're up here because, they are so explosive and they can go so far. But to make a lot of money on this part of the move, which I would say is the hardest part because of that range, you have to take on more risk. And someone like Surfing Waves asked, like, we wait for the 42-cent breakout and hold for a day. Don't buy the breakout. We wait for the 42 and hold for a day. Don't buy. I don't really know about that. But I mean, you have to come up with a plan at this point that keeps you comfortable, keeps you safe, and allows you to like take advantage of the move if you think it's going to happen. And that's it's difficult because there is no clear set risk level. Every day this thing has found a way to pull barely below a previous support level and hold on low volume, and then you're left wondering, is that the new risk level? And then the next morning, it breaks it by a little and holds. And you're like, okay, what do I do? Where do I buy? And I mean, for me, I wrote to a buddy or someone on Friday. I'm like, I took off some shares after the failed breakout on Friday afternoon. I said, I will not re-add these until we break 42 again. And when we do, I'll add them all back. But if it doesn't show me that it's like convincingly going to break out, I'll pull them off again. Like, I'm not playing this game where I move my average up, sell it lower into a panic, rebuy it, add again over 42. And like, I'm not playing that game. I will happily take a worse average over 42 if it for sure is the real breakout. Because once we break out over 42, I expect a 45 to 50 test relatively quickly, and from there I can finally be comfortable with a sub 40 average and let the thing work. And that's kind of like now we're starting to gap up into the 41s, kind of what I was expecting here.
Oh my god.
And I mean, that's you have to create a plan for yourself that keeps you comfortable and allows you to take advantage. The what you don't want, which I think happened to Huddie on Thursday and Friday, and which happened to me with about half my position over and over again, was the lack of comfortability kind of led us to be buying random spots, risking random spots. So we're taking a bunch of paper cut losses that maybe to you guys would be detrimental losses. But for what we want to risk on the play, like for me, it's my biggest risk I've ever taken on a trade where I'm actually planning on losing if I'm wrong. And so I'm losing a portion of that over and over again. I'm getting in, getting out, getting in, getting out. And that is causing me to get exhausted and like hate the ticker for my own actions. And that's what I think you want to avoid, because those can be so mentally frustrating, especially if the stock goes on to work and you're already in a 10K hole. Because now you're forcing yourself to get size to make sure you make more than 10K to get your money back that you've lost on a play that's technically working.
Terrible. It's a terrible situation.
It's it's like that Taylor Swift song, "Death by a Thousand Cuts," and it's a horrible feeling because the stock is just throwing up the middle finger at you every time it holds. It's like, gotcha. Hey, why don't you buy again? And you happily will do it because now you're like, oh, it held. It's gonna break out again, and then it pulls, and you're like, this thing is shit. And then you buy again because it holds, and then it does. And that's exactly whoever they are. We always talk about. That's what they want. They know what they're doing. Like that's why it was so hard for me to sell any on Friday afternoon into that poll, because I was like, they know what they're doing. They just got a ton of people to buy the 42 breakout again. They're gonna pull. They're gonna shake out all those hands, and they're gonna gap it on Monday, and they're gonna say, here, buy it again. And like they know how to get you in and out, and your job is to not give into their game. And that is where entry is so important. That's where having the right risk level and sticking to your plan throughout the entire play is so important.
Yeah, I'd honestly really prefer ILUS just go to 0 today. I don't ever have to look at it again. Because I did the game, I played the game. I played their game, I was in at 40. I was cutting 39. I was backing at 40. I was cutting 39. It's just an awful way to trade. It's an awful way to trade. It is not long lasting. Like again, like the whole thing about this is like, can you find a strategy that you can do this for years, right? There are so many strategies that work, but like I don't want to trade like that, right? Like I don't want to be a scalper. I don't want to be, in and out in 5 minutes. Like I know that there are profitable ways to trade, but like, God, is it exhausting? So much more of like a one entry, one kill type of person, and just like sit there and allow it to work and allow the chart setup to develop. But I'm trying right now. What I felt like what I was trying to do with ILUS, I felt like I was trying to develop the chart. I was trying to make the prints be there, and that's not my job at all. That never is. And so I'm so sick of talking about ILUS. Can we talk about something else? Even though it's probably a great setup, and if it does break out, it's probably going to $1, and it's probably going to be
42.5.
I can't wait for
42.5.
The gapping up.
Yeah, back to the breakout low.
See, and like this gap up and open, like that's just terrible. That's just mean. They've duped everyone into close, pretty much on everything. By the way, everything crashed into close, and then they just gap it up like on the air, like they always do. All right, market's open. Yeah, I'm kind of watching CYBL. Don't have a position anymore. That's where I should have a position. I had 1.8 million shares at 4. So like up here, it's near 18 grand. Super bummed out that I sold that whole position again, all because of ILUS. This CYBL was really the only one I really understood. So that's my demon to wrestle with for the rest of the day.
Yeah, and apologies if I am quiet for the next 5 or 10 minutes. I'll try to explain what I see if I see anything of importance, but ILUS has me by the throat, so I'm going to pay attention to it. Testing the breakout again for the 27th time.
Just getting everyone to buy it.
This is where I get excited. I'm like, we finally made it through the hard part. Oh my God. Give me some 43 prints. There's the thin. You see how the bid is 42.04 by 42.9. This is little games they play that around key levels where, in my opinion, what they're doing is they're forcing people to cover on the ask, and they're not giving them an out anywhere close. Look at this. It's a penny spread right now. It was for a second. Like, that's insane. And in my head, that's what I kind of think is they're trying to get you to, if you want to buy it or cover, you have to do it at the high of day. We're not letting you do it anywhere in between. And usually when that spread.
5? Sorry, go ahead.
No, that's huge. See, and you're not in it at all.
Nope.
See, and that's frustrating because
it's very frustrating.
And that's from a sub 4 average. That's great.
Holding back, mate.
I'm sorry about that.
Yeah.
And now you got a very clean looking breakout day that you're going to probably hold all day with risk on yesterday's lows and enjoy your salmon suit and your caviar.
Yeah, I mean, I would literally just put a stop loss in at 4 and go to the gym right now. Let it work. Don't even want to watch it type idea.
Anyone noticing anything in listed land? Was there any first green days? I saw
I got one
CRVS.
thing
There wasn't any
in my end.
range. My God, ILUS fail again. This is what I'm saying. Every one of these is like a punch to the gut, and it's like I don't know how many punches I have left to take. Like, just break out and hold. Like, this is the 5th time now. And now we sit through the liquid poll where 5,000 shares pulls at 3 pennies.
I am watching this bonds chart. I think bonds is a super interesting chart. I don't necessarily know where I want to buy it yet, but I like the chart look. Like if I'm looking at the daily chart, I like how it's setting up. I like how it had a big green day. Now it's consolidating near its highs. It looks like it's an earshot of a distance of a breakout. It's definitely one I want to continue to monitor. Kind of get a feel for how it trades. I know it's rather liquid right now and not really doing much.
For me, this is one that like this one where I randomly stabbed into on Friday, and remember then I was like, "This is horrible. Why are we even looking at this? Like the spread was bad, like the liquidity was bad." This one where I want to see it hold, like do something, like hold 2 for a while, hold this 2.8 top, give us a range, and then we'll figure out the middle part. Like give me more information. So it's one I probably just don't want to look at today because I want it to. Wow, this one got hammered. One that I want to watch it develop. This chart, man, I am so sick of this.
TGGI is panicking. I know some people like that panic dip buy strategy. I personally really like panic dip buys off multi-day runners. I find the levels like as you watch them run, you can really get a good feel for what levels need to hold or should hold.
You want to answer Scott's question?
Judgment. What is it?
He asked, you'd feel comfortable using a stop on CYBL even though it's an OTC. Does a bad market fill concern you? I can answer it. You can answer it. We can both answer it. Because I've had mixed.
What I was saying in my Friday, what I was saying in my Friday webinar, and for steady trade students was, I don't care to make money. Like I am not here to make money in any given day. I'm here to trade well. That's the most important thing to me. So if I put a stop loss at 4 because that's the area to risk, like that is the good area to risk. That's the intelligent area to risk. And I end up filling, 3.6, 3.5, lots of slippage. We're talking like 15% of slippage, which is probably worst case. It could be worse, but like that's like realistically worst case. I'm not upset. That's probably a normal size loss. That's probably just losing, $2,000, $3,000, which is right in my ballpark of losing. Now, if I had an entry at 4.7 and I put a stop loss at 4, like that extra 15% would really hurt. So it really comes down to your entry, but I have no problem putting a stop loss where I don't think the stock should go today and leaving. Yes, there is risk there. Yes, it is fraught with risk and like bad things can happen, especially like, yeah, you're right. Delayed execution, bad fills, like it turns into a market order. It could be much lower. Like that sucks, but that's how I choose to trade. Like I don't care about losing another 1/10 of a penny of slippage when I'm risking the right area that I don't think should break.
And I'll add on. I'll add on to that and just kind of like, you hear from pretty much every guru or trading teacher, like risk management is the most important thing. And at the end of the day, what we always say when we're creating risk levels is that's at the point of which you would no longer want to be in the position because your thesis is unvalidated, right? And there's so many people who wouldn't use a stop because of a bad fill, but if you know you don't want to be long anymore underneath that level, wouldn't you just want out at all costs? I mean, if I'm sitting here and I put a stop somewhere, it's because I don't think it should get there, and if it does, I want out. So, and more often, this is where I think I see people create bag holds for themselves. They think they know better, so they're like, I'll put a stop in, I have a risk level. It's testing, and then you don't fill immediately. Like say, like that 4-cent example, and you put it at 3.9, and it goes through 3.9. You're like, okay, well, I'll just hold for a bounce. I've lost more money in that situation than I ever have in a bad fill because you try to
Yeah.
micromanage and get a better fill. When I want out, I want out. I'll deal with the loss after when I'm not in it anymore. But I'm telling you, being stuck in something you don't want to be in, lower than where you wanted to be out at because you wanted a better fill, is way worse than just taking it on the head right off the bat, be done with it, and then be pissed off that you lost more than you wanted to.
Yeah, let me tell you the amount of emotions that come into your head when you miss your exit point and it goes much lower, and now you're just sitting there waiting for a bounce. We're talking about
And
distracting you
then,
from the real play that's probably just
yeah,
around the corner,
and
opportunity cost
then,
to buying power,
and then
distracted,
the infamous line, "I'll just bag hold it."
and then the death sentence. Uh, they'll come back. I'd rather, yeah, we're dealing with penny stocks. Like, I want to be in these things as less amount of time as possible, right? But with the same, idea that I want them to work. I want to give them time to work. But if it's not working, I don't want to be in this thing anymore. Who knows? Any night could be good night for any of these stocks, right? Like stock trading, penny stocks is there's risk everywhere. So we're trying to find those predictable moments to be in the stock. And for me, it's like, especially if it's not working, like as least amount of time as possible. And the second you get into that game where it's like, okay, this broke my stop loss, and I have to stare at this thing and wait for it to bounce, when you're not the only one probably doing that. That's a terrible situation to be in every time. So I honestly, I'd rather be out. Like that's such a key thing in my trading. Like I don't, and it takes a lot of maturity, and not maturity like age wise, maturity like being in the market for so long, knowing that like no one play is worth it. No one play is worth that loss. No one play is worth that distraction, that opportunity cost, whatever it is. Just get out and be out. That's always my that's where I gravitated towards. I'm not, yeah, like I said, I'm not really walking much. I wish I was just in CYBL right now. Like that's just a moneymaker. I could allow that one to work, breaking out of this 5 area, consolidating near its highs. It looks really good. That's an unfortunate situation. And it leads me to, back to the drawing board, right? Like where can I find the next play, and is it actually a play, or am I just making shit up because I'm supposed to be in one and I'm not in it and I'm trying to find something else to trade, right? That's usually your most detrimental. That used to be my most detrimental moment. I remember before, that's a nice 5 break. Before, what was I gonna say? I forgot where I was going with that. Before I found consistency, people always just ask me like, when did I find consistency, right? Before I found consistency, sorry, I got distracted with CYPL. I was all over the place, right? I was trading everything. And then once I found consistency, which means once I actually opened up a high net worth broker to allow myself to short sell, remember, I made my first 200K short selling, okay? And I've made a lot more money doing both, but a lot of my money came from short selling. And I remember very vividly back in the day when I didn't have the right broker and I couldn't find the shares to short the stock that I wanted to short, immediately I would start looking for another play. Immediately, I would find another play that is not my bread and butter, that is not what I plan to trade. But since I couldn't trade what I wanted to trade, I'd go find something else to trade. Again, like really, really bad tendency to go do that. Sometimes it works. Sometimes you do find something else to trade, but oftentimes the trade that you should be in is already there. And if you're not in it, it doesn't mean like there's another play, to your left or right. It usually takes some patience to allow something to construct that well again. I remember it so vividly, like immediately once I didn't have the shares to short, not only would I not play that stock, I would actually stop watching that stock and I'd go, put 6 other tickers on my screen and try to find entry there. That is so bad, I think. And leads to, again, distractions, opportunity costs. I remember not watching the play I should be in and watching plays I shouldn't be in. And I was learning from the wrong plays instead of learning from the play that I should have been in. So God, but I don't know where I was going with that, but it is important to recognize like when you start scanning for other plays because you can't trade what you want to be in, is generally a bad thing to do. I mean, maybe you can find a good play, but again, oftentimes the best play to be in is the one that you're already in.
Dude, my E-Trade's not working.
Why is
it
that?
won't let me buy or sell. Jack is telling
good.
me it got restricted for placing too many orders. I can't even. It's like the red line of death. I can't even click the button. What the hell? I just want to see what happens.
Hey,
look at that.
Breakout.
Look at that red line of death. Oh my God. I'm gonna lose it. I'm gonna lose it.
That's some pretty healthy consolidation and a perk off a base.
Oh, I need more. I should be calling E-Trade, but I'm not. Oh my god, I'll get more later. I literally said, "Oh, I won't." Let me see what I wrote. So I was gonna add 500 to 600K over the breakout once I felt like it was time, and it won't even let me. Ah!
That is the first time over 43. So that's technically a sky, like, a new high. Um, whether this leads to, absolute volatility, it should. It should. It's going to be interesting to watch here. This is an interesting moment. Had I not taken, a million paper cuts in the past 4 days, I'd probably be, buying for the first time right here, risking either 41 or having that really low risk to 36, like that green red risk, and then allowing it to show me another risk. That's generally what I've done really well on these multi-day breakouts. Because again, buying the breakout, setting that first risk where I don't think it should go, having to have that wide risk expectation, and then allow it to trade, allow me to show, watch it trade, let it show me other levels. Maybe 40 cents becomes really important, and I can start to risk 40 cents and add to the position. Get my risk, get my size up. Very methodically, very patiently. But because I messed up everything and literally anything, I'm kind of sidelined right now. I can't really,
Where the fuck
bring myself to buy 43 and then risk 38 with the same size. Like, it's just absolutely would put me in a blender. I wouldn't be able to sleep at night. But really good read, Dom, really good patience, really good just sticking with your play. And again, that's why you have that low entry. That's why you have that like gut feel. But again, I do believe, buying it 2 days ago was a bit early, right? Now, read and experience can teach you a lot of things. But for me, buying outside of my realm of,
It keeps going back to that. It's kind of a mixture of having the experience, because, like I said earlier, like realistically, I would prefer coming off of this panic day that it consolidate multiple days up near the breakout level, right? That would yield the best result, right? But how many times have we seen that snapback breakout happen? And so you have that like potential FOMO, if you will, where you've seen so many different outcomes happen from a chart setup that you kind of handcuff yourself to just needing to get in. And that makes, the trade that much more difficult if that first part doesn't happen and it doesn't just go and break out immediately. And those are kind of lessons you just kind of got to learn on your own. You have to see it happen enough. And again, no clear break there, which, that's just, God, this thing is freaking difficult.
Right. God, I'd rather not look at iOS for another month.
I am so.
That'll make me so happy.
It's just like, do it or don't do it. I can't sit here anymore. How is that not?
I mean, you got to be somewhat happy that it's above the highs, that it's above 43. I think it is working right now. But I thought that
I need like consistent, like in the last 4 days, like every spike is just like a couple seconds long, and I want that like 5 to 10 minute run of like 2 or 3 pennies, where a pullback, an expected pullback isn't going to kill it. Like I don't want this to pull to 40 now. Like I don't like that, and it's totally possible it can.
Yeah. You're watching me. This is just extreme discipline right now. Obviously, I want to be in iOS, but obviously, like, that's not good for my mental safe being if I get back in right here. Like, I will not be happy with myself if it goes down to 40 and I take another loss and then it continues to break out. I will literally throw a rock against the wall. I'd rather not even trade it. Just wait for the short setup. I know what always keeps me patient is the knowing of a big play around the corner, knowing that there's another play around the corner, right? Like, I'm looking at CEI on the back, on my peripherals. I'm seeing it at $2.30. I don't want to short it here, but I know if CEI goes to 5 or 6, does something crazy, I have a really good play there that like I really don't need IOUS. IOUS is great, like it's there, great multi-day breakout, can really extend. It's not the only thing in the world. It's really not. If I have to miss it, so be it, right? There is other plays setting up. There's always other plays constructing. And it's just about being patient and knowing that is there, right?
Yeah, and for me,
that's super important.
I can't miss ILUS because it is my bread and butter, like it's what I do best, and I can't miss it. And that's what kind of gets me in trouble sometimes, but I'm persistent. I will continue to try.
He is persistent.
I just need this at like 45 or 46 and then stop loss, go do something else. I will not sit here and watch this all day. I promise you that.
Anything else you're watching?
I don't have energy for anything else. If I was in CYBL, same as you, I wouldn't even be watching it. I'd probably trust that 4 level. I'd maybe look for a buy towards the 4.7, 4.5 to 4.8 area, actually, somewhere in here, an ad, and then I'd be leaving that it's a good gapper, so it's something I'd want to swing for a day, see if you can go to 6 or 7.
Look, Surfing asks, so we can buy the breakout for ILUS. Look, we cannot tell you whether you should or should not buy anything. We are not, giving investment advice at all. We've explained the scenario to you, right? Like all we can do is explain the scenario to you. I told you it's fraught with risk. I told you I'm not buying it, and you're asking if you should buy it. Like you can buy whatever you want. All we can do is give you information to work with, and then you have to unfortunately make your own decisions, right? Like we cannot tell you whether you can or cannot buy something. You can and cannot buy anything you want. I'm telling you I'm not buying it. Dom's telling you he's already long for much lower. Use that information and do with what you will. What we can tell you is it is a multi-day breakout. It is a pattern. What we also can tell you is that it's fraught with risk in other situations. Hey, let me close that door. Hang on.
Yeah, the big thing really is that it's, again, about trying to keep yourself in a safe part of the trade. And it's scary up here. I mean, yeah, you can put risk on low a day. That, is not horrible. You're risking 2 cents. I think you can maybe make 10 or 15 cents on this if it works great. But again, that low a day is still almost 3 cents off of green red, which it could definitely still test. The stock is crazy. And then again, what we talked about with it being up here at 40 from 7, the range is going to be crazy. It's going to be way more volatile than it's ever been, which makes it very difficult to stay in the trade. And every tick means so much. And that is why it's difficult to just buy the breakout here. If you're going to do that, like if I did that, I'd have super wide risk. That's the way I would do it. And, that just potentially kills potential profit. But, for me, I'm just waiting to see it. I tried to add a little earlier down here, but I want to see this actually break out, which I haven't seen it do yet. It broke yesterday's high again, but yesterday it broke the highs from the breakout level and just faded off. So I want to see some sustained strength, and I want to see the bidders support it.
And it also comes back to I said this in previous stock therapy episodes. When I get into a stock and I notice my dollar position size is so small, should I even be in the stock in the first place? If I have $10,000 in the stock and I'm risking $1,000 or $2,000 on $10,000, is that even worth it? Right? Because sometimes I can find scenarios where I have $100,000 in the stock and I'm risking $1,000 or $2,000, right? So if I only have $10,000 or $20,000 worth of equity in a stock, that means I have really wide risk, and this thing needs to double and a half for me to make a decently, sized trade given what I normally trade and what I normally make. So it's just, honestly, it's not worth it up here. For me, I need to find another risk level. I need to allow it to construct. I need to, show me that I can risk 40 and show me that it's going to go higher. Right now, I don't have any of that confidence, right? Given what it's pulled in the past. So I got to wait, because it just, right now, it wouldn't be worth the trade for me. I would just be, putting $10,000 in a stock and then, hopefully it goes to $1 for me to make 10K. The odds of it going to $1, that's a dream and a belief. It can do it, but that's a black swan event, right? It is the right scenario for a black swan event to happen, but it might not be today. It might be a month or two, like TSMP, like I said earlier, it definitely has the ability to top out here and then re-break out later. And I already hate the stock. And if I hate it that much more, by the time it actually does break out, I'm gonna have no size. So I don't mind being patient. I just wait, there's going to be another play. There's going to be another breakout. There's going to be something for me to size in much harder. Remember, I had, 1.8 million of CYBL, right? That's a $60,000 position with like barely any risk on the table. ILUS, I cannot have a $60,000 position here because I'd be risking what, 12K, 10, 7K if I had $60,000 worth. That's not cool. Always be thinking about that risk reward equation. It really helps you decide like, okay, yes, it's a pattern, but like, does the risk reward make sense? Like that is a part of the equation that you need to force yourself into thinking. And that takes time. It really does.
Yeah, I think something that always helped me, and I learned this early on whether or not I should be in something, because, like right now we're not really looking at anything else to trade, like to click buttons on. And that on Monday morning after a long weekend, I know, especially as a beginner, you want to click buttons and you want to make money. You can't make money if you're not trading. But something I would always ask myself is like, best case scenario. Like say I'm risking $200 a trade. I'm buying here at 43, risking 41. I got 10,000 shares. And I ask myself, like, what's best case scenario? Let's say 50 cents is best case scenario for me. At that point, I'm making, what, $700? Risk reward wise, it's not horrible. But like, say you're someone who wants to make, 1,000, 2,000 on your best trades. That might be something that's just not worth, your $200 risk. And
that's what I 43 hold.
Yeah, and that's, I think, something you just gotta like ask. I think a lot of people just get into trades because the pattern's there and it looks good. But in reality, like, it's like opportunity cost. Like, is the money I can potentially make good enough to warrant a trade and to warrant the risk I'm going to put on? And, for me, with how much size I'm taking and, what I expect from the stock, I definitely warrants a trade for me. Not here. I definitely wouldn't take the size I have from up here, but I think it's something to be aware of. Like, why should I be in it? If there's more reasons you shouldn't be in it than you should be, and that should really come down to the money, then you probably shouldn't be in it, even if it is a successful breakout. Just because you didn't get in where you wanted to, or the stock didn't set up good enough.
It is looking really nice, Dom. I think like I'm happy for you right now. I feel like it's working. I feel like we just broke above 42, came back down, held that higher low right at 42. As we got back over 43 on that reclaim, the bid stacked, and now we're pushing higher. It does look like you're going to get that spike to 45 right now, which is going to be, happy days for one of us. I'm sitting here sad.
Huddie, why don't you answer a question from Sean? Answer the question from Sean.
If CYBL will create a nice swizzle action today, will get your attention, or is it too late to the party? I don't think it's too late to the party, actually. I really don't. I generally, my like general idea is like, I think breakouts, like where I start, my foundation is I think breakouts can go really far. I think if you're in a good breakout scenario, it can produce results, right? So if a breakout is up 10% from the breakout level, and it starts to consolidate really healthily, call it a swizzle, call it healthy consolidation, perfect sideways action, tops out around a whole $0.50, call it 5. If it all looks really good and it's not too extended yet, like I think it could keep going, right? And if I do think it can keep going, then yeah, I want to be a part of it. Is generally how I think about any breakout. Like if we are like, I remember TGGI on Friday, like I was buying 2, and then it, kind of swizzled at 2.2. And again, that's 10% from 2 to 2.2. So I didn't mind averaging into 2.2, having that 210 average with risk on 2, because my risk still made sense in that scenario. But if it's swizzling and consolidating, like, 50 to 100% above the breakout level, like that's dangerous waters. Because I think like just as much of a swizzle can be a good swizzle, like it could also break down and be really detrimental. So I do like, healthy consolidation just above the breakout level, not below it, but above the breakout level. That is really interesting to me. And oftentimes I do size into those situations and, try to get my risk to that new level. But with, healthy consolidation, it has to show me a new risk level. If I'm going to add to a position or buy it for the first time, I need to see, something close by to risk, and I need to be certain on it, or else, I'm chasing the stock, which, pullbacks, get more and more extreme the higher the stock goes. So that's something to be aware of.
What do you think about TLSS? I have my own opinion, but you're kind of just rocking and rolling this morning, so I want you to tell me why it's okay.
I pulled it up the other day. I liked it.
Why don't I like it? Why don't I
Well,
like it?
I know why you don't like it. You don't like it because it's so far off its highs. Like even if this does break out, is there going to be a lot of interest here in the threes? That's kind of how Dom usually takes these into consideration. The closer we are to the highs, the more buying interest there's going to be in theory. With that being said, I think this daily chart, I saw it the other day, TLSS, if you guys, need to pull it up on your screens. Something that is basing, above 2, kind of consolidating mid-range in between 2 and 2.4, giving that really, tight risk reward. We have seen a number of these stocks work lately. We have seen like the VPERs, a lot of different stocks coming from the gutter that actually put in some kind of nice breakout scenario. What was the last one? Like Fern or something? I don't remember necessarily, but I do like this chart.
ILUS did come from basically the same type of spot, but it didn't become like, even on this breakout over the 12 area. What did I tell you? Remember, you kept saying how right you were. I mean, what did I tell you over the 12-cent breakout?
I don't know. I just remember telling you that it was going
What did I
to
said?
go break out and go crazy.
I said sell 14 to 16, and because I didn't think it had the juice to do what it's doing right now. And that was my conservative mindset of it coming from these lows. Like, yes, it's possible. I don't think it's expected that these should go on to go break those highs that quickly, but it's definitely possible. And that's why, and the way I approached ILUS each time, because it started as such a just okay B plus type setup, and as it proved itself as a worthy like stock leader, I gave it more size, I gave it more attention, I gave it more potential range on the upside. But it's it's important to know I started with really small risks. I mean, really small price targets, and on TLSS, if I was interested in that, I would do the same type of thing.
Yeah, and I totally get what you're saying. And for me, the day that I realized that ILUS was a beast, the day I realized it was a beast, that it could go break, like I was still in. I remember it was like at 14, 15, and I got on a call with Dom, and I was like, what if this thing consolidates at 20? Like this could be crazy. And Dom's like, no, like play the range, like play it within, like, be conservative. I'm like, but this could be crazy, And the thing that tipped me off to crazy was, I think like one of those days as it started spiking up to 20, it traded 100 million shares one of those days. And I was like, whoa, like that is not like volume to be trifled with. That is some very interesting volume, especially for like an OTC stock. Like you don't see that much volume on OTCs at that price level, as it's like, spiking and doing good things. You might see that kind of volume like just one random day, but like not building, TGGI kind of had the same concept where it would just start building so much volume. Like when I first started buying it, it had 200 million shares traded on any given day. Now it's traded 200 million shares in 30 minutes, right? So I was just like, whoa, like this could be crazy, TLSS doesn't have that crazy volume at all. So like we're just going off of a pure chart pattern. Like, if I go back on TLSS and I'm looking at a 150-day chart, like I see, good consolidation, sideways action, can easily be a multi-day breakout. Maybe you can get that entry at 2.2 and that leads it to 2.6, and then 2.6 goes to 3, right? Like that's what I would kind of expect. But again, you're dealing with a chart that's really badly beaten down. This is not a chart Gritani would ever buy. This is a chart that I see a lot of OTC traders like to trade. They don't, OTC traders generally don't like care about overhead resistance. Like they care, but they're willing to try it, especially in a hot market, just because things work so well. But this doesn't really have, the volume where I think this is going to go from like 3 to like all-time highs right now. I definitely think that you have to play the range here, like Dom was saying, until something tells you that like that it can be something special, right? For me on ILUS, it was the fact that it traded 100 million shares randomly in a day, that it was just spiking. I was like, whoa, that's a crap ton of volume. Like when I first started buying this thing, it was trading 10 million shares a day. Now as it's spiking, it's trading 100 million. That's something funky. I like funky. I like obscene situations. That's when that's when that thing in my head starts ringing and it starts going, okay, whoa, this could go to 40. 10 days before it goes to 40. It's the volume usually.
Yeah, so I mean,
right now, we're spiking on really light volume.
We're gonna wrap it up here, but I'll kind of walk you through so it's 10 o'clock here on the Eastern Seaboard. I would call this at this point a confirmed breakout on ILUS. This is the first time it's broken, held up, and then broken that high again. You got good volume. That's right now, 11 million. So my approach is going to be, I'm going to go set up some hunting blinds up north. I'm going to leave and I don't want to look at this anymore. I mean, that to me, we are at day one of the breakout now. Every time this has had a day one of the breakout, it has gone on for at least 2 more days. I don't foresee myself holding for 2 more days. I'd love to be out tomorrow, maybe a press release, big gap, or that parabolic crazy action, a speed up into 75, something like that. But at this point, I know the best way to be patient on this is to not watch it. There's nothing I'm going to learn from watching it. It's only going to cause scariness on the polls. It's only going to cause me to want to panic out. At this point, it's a very clean chart. Everything I have talked about for the last 2 weeks is becoming true. We held up. I said if it comes back to 40 and breaks out, it could be explosive. I want to reap the rewards from that prediction, so I don't want to be here. I mean, I could sell right now and make a wonderful amount of money, but at this point, I've missed all the ad spots. It's up at 45 cents. We got the confirmed breakout. I don't want to be here. I just want to let it do its thing, and I want it to go absolutely crazy. Got a 45 break.
And look, and it's really important what he just said right there. He's like, I could sell for a lot of money right now, but again, we're not here to make money. We're here to trade well. And if he trades this well, which is, judging based off how it used to run, judging based off everything he's learned, that's him trading well. The other night, I think it was last night, my buddy had some parlay bet, and we're watching, and this is going somewhere. We're watching a football game, and I think it was the Rams versus the Bucks, and the Rams were up 2 touchdowns to the Bucks. I think it was 2 touchdowns and a field goal, so 3 possessions, and it was start of the 4th quarter, so not even enough time for a team to have 3 possessions. And he looked at us and he was like, "Hey, should I, just take the money now and it would get subsidized? He would take less money than if he let the game play out." And he was betting on the Rams winning, and the Rams were up 3 possessions. And he was like, "Should I just take the money and whatever? I don't make $11. It get subsidized, or he wouldn't make the full amount of money that he should win because he's taking it out early and just saying, 'Hey, let's call it right here. I want the money now.'" And my response to him was "Look, if you're at a blackjack table and the dealer's showing an ace and you have blackjack, do you take insurance and kill your winning hand? Absolutely not. If you're in a predictable winning situation, you don't just take the money just because you're up on the money. That is a purely gut emotional call. If you're in a winning hand, you don't just take the money because you're up. You need reason to take the money, right?" And I thought that was really interesting. I was like, "Oh, no, that's not a good betting strategy. You don't just take the money because it's $11. You say his whole thing. Wait. His whole thing was it's only $11, and I'm like, it doesn't matter. Trade well, bet well."
Yeah, and I'm a pretty avid sports bettor. It's an addiction. But anytime the house is offering you your money back and more is because they know they're going to lose. And that is not the time to, and not necessarily always golf betting. You can get some pretty nice returns because the odds are so good on one player to win. But if it's a straight up Arkansas is going to beat Texas A&M and it's the 4th quarter and they're offering you double what you paid, I mean, generally it's because they are trying to save as much. They're risk managing their loss there, and you don't want to give it to them. That's how I look at that. I don't think I've ever taken that money early.
No, especially when a team is up 3 possessions.
And that's what I'm doing here. Quarter. I mean, this stuff scares the crap out of my dad, who he's worked his whole life. He's seen money come and money go, and this is what he struggles with in trading: is watching unrealized profit just sit there and move all day long. And this is something that you definitely have to experience has to be the best teacher here. And it's as I talk to him, it's so when you're starting out and you're just trying to make $500, right? It feels great. You get used to making 500, you start to size up. Now you want to make 1,000 every trade or on a good trade. You have to be up $500 to make 1,000. So you have to sit there and be willing to risk that 500 not making it to make the 1,000. And at the point we're at now, 5-6 years down the line, to make a $100,000 trade, I have to be up 75 grand unrealized. I have to, and I have to be okay with the prospect that is going to disappear. The same way my $200 is going to disappear on the way to 300. And people, because that money is so much bigger now, and I mean, I don't know, a lot this year that's happened where I've been pushing for that big one, and I've given away a car, I've given away a down payment on a house, and when you look at it like that, you get really demoralized. But in reality, to get where we want to go, we have to be okay with that. And every time that's happened, it's been a great lesson. It's demonetize. It's like, what's the word? Desensitized myself to that money, that unrealized number, and it allows me to just trade. I don't look at my P&L. I was a math major for a while. I'm good enough to know if I have 100,000 shares and it's up 10 cents, how much I'm up. But seeing that number, I think the whole way up is not good. That's why I hide mine. But I think it's just a good lesson. Like, let the trade play out the way it's going to play out. I have an idea of what I think it's going to do. And if I'm right, I'll be rewarded heavily. And if I'm wrong, the same outcome was going to happen as the beginning. And I can't let all that stuff that happened in the middle, like, deter me from doing it again the next time. I have to learn that one of these that works is my month. It's 3 months. It's half the year. It's a year for like 3 or 4 years ago. So I have to like understand that I only need one out of 5 or 10 of these to work perfectly and me trade it perfectly to be so far ahead. And that, I think it's tough from people to go from such small stakes to like medium, because those numbers are so much bigger, and you have to be okay. It's not even anymore it's not being okay with risking, like more like losing 500. You used to lose 300 per trade. Now you want to lose 500. It's the gains part. I'm going from trying to make 1,000 and trying to make 3,000. Like, but I used to be so happy with $1,000 trade. So every time you see 1,000, you just take it. And that's what we call trading P&L. And I think it really is bad, because so many people are like, well, I took the money, I did a good job. But in reality, you weren't trying to make 1,000. You were trying to make 3,000. And you have to see it through. And once you make that 3,000, you go, oh, this is what happens when I stick to my plan. And it's like positive reinforcement that I need to continue doing that, sticking to my plan, not trading my P&L, but trading the process, trading the patterns.
Yeah. And someone said that they feel bad for Huddie on ILUS right now. Like, honestly, I feel way worse about CYBL than ILUS. Like, ILUS, I could care less about. The data enter for me was today. I'd be up 2 pennies. Yeah, I'm in a working situation, but like CYBL is where I had the risk reward. That's where I had the size. That's the one that did do the multi-day higher low. Like, it did the thing that I'm looking for, and I took myself out because I was in ILUS. So like that is way more frustrating to me than missing ILUS that's up 2 pennies. Even if ILUS goes to 60, like, I got it. CYBL, that's the one that I should have right now. That frustrates me more than anything.
Yeah, that's my biggest regret from last week. That 4-6 or whatever that it was it 3 days ago?
3-8.
3-8 to 4.
Man, I was just staring.
Anywhere in here, I absolutely love. Like,
yeah,
I like it a lot.
Anything past that, I don't love.
And you have to expect that the ILUS strength in the OTC market is going to rub off on some CYBL. Anyone who feels like they missed the boat on ILUS is going to transition over to that nice little 5-cent stock right where ILUS started. And who knows, this thing could double. Could go to 10, go to 6 or 7 and fail. But that early entry, the same pattern we've been talking about for months, is, that's where it is. And you're just starting to reap the reward today from the work on Thursday. And that's what we want to do. Easy swing trades that, you don't have to stress about, manage along the way, and get rewarded when it's time. I love this 45 hold right now.
All right, should we call it?
Yeah, I got to get some stuff done. I got to go up north. That's what we call it in Michigan.
All right, guys. Thanks for tuning in.
All right.
Thanks for tuning in, guys.
I think the next one is Wednesday. The next one's Wednesday with Jack.
With Jack. I think that's on Twitch, though.
That'll be on Twitch. It'll be a free one.
I think it's also here, too, though.
Yeah, I don't really know. We don't know anything about the back end. Like, we barely can get these streams together.
We just show up.
But yeah, we're super excited for that. And I'd love to get his perspective on the shift in OTCs happening right now, because, he understands this stuff really well and can hopefully reiterate it in a way that can help you guys out. So we will see you then. We're signing off. Have a wonderful day. Good luck on your trading.